Today I'm speaking to Chris Williamson, who's the Chief Economist of Markit in London, about the European Central Bank and Bank of England's interest rate decisions. Both central banks kept their rates unchanged, and in the ECB's case, the decision led to a rise in the Canadian dollar from almost a one-month low. Well, Chris Williamson joins me on the line now from London. Chris, the ECB has kept its rate at 0.75%. What stood out for you the most about this rate decision, and why was it expected?
Well, first of all, I think they left interest rates unchanged, quite rightly so, because if they were to have lowered it, it would have really undermined what they've been saying about the OMT. So what they want to see as the next step is a formal request for a bailout from Spain, which will mean that Spain is signing up to the conditionality that's been agreed that will allow the ECB more bond purchases to then take place. So I would have thought that Draghi is really just going to say that the next step is not the ECB step. It's for Spain really to take that step. So until we see anything of that, I don't see much scope for any further ECB action.
One thing to look at where the ECB is concerned is conditionality on the OMT programme, as this had the potential to affect an early Spanish bailout. What are your thoughts on this, Chris, going forward?
Well, we've not heard anything definite for now on that, but what is coming through is news from Reuters that there are discussions about the euro system guaranteeing the first 20 or 30% of all Spanish new bond issuance. This seems to be the story of the day. So I think Draghi will be questioned upon that and the implications of it. And this is something that's been talked about before, but it's been gaining momentum today. So it'll be interesting to see whether this is seen as the new fix for Spain. There's many concerns about it, notably that if they were to guarantee the first part of any new issuance, does that send a bad signal about the creditworthiness and could actually backfire? Will it have a significant enough impact to really redress the problem? Throwing 50 billion instead of 300 billion at Spain is obviously an attractive proposition, especially for Germany, but many people are unsure whether it will be enough to really address the problem.
Finally, we expected no change from the Bank of England today on their rate decision. We got that. When do you expect the BOE to take action next, and what else can it do to help boost the flagging British economy?
Well, I think ourselves and a growing number of people are looking at November. We did see some people, I think there was one economist polled by Reuters who thought we might see some extension of QE today, but we think November looks likely. There's only really two things which could argue against that. The first is that the economic data, both at home and abroad, really pick up quite noticeably. And by the economic data, I refer to the business surveys, really the PMIs, because they're watched ever so closely by the bank. The second is, of course, the bank's got its eyes very closely on the funding for lending scheme and what impact that might have on lending to businesses and households. Now, the last credit condition survey from the bank showed that lenders were considering that the scheme would have a big impact as the year proceeded, so especially in the fourth quarter. The latest actual data on lending showed no such impact. In fact, lending to businesses fell quite sharply. So whether it's just a timing thing, whether we'll see that pick up, remains a big question. But, in the light of that, I don't think that the numbers are going to be there to prevent the bank from doing anything other than at least 50 billion of QE in November.
OK, that's all we've got time for right now. Join me tomorrow when I'll be speaking to renowned economist Bill Hubbard in our weekly wrap-up. And don't forget to stay tuned for the rest of the day for up-to-date reports on the markets from the team here at Dukascopy TV. Goodbye.